It is Thursday, and that means we have a whole bunch of economic data that is just about to cross the wire. We're going to get initial jobless claims, revised fourth quarter GDP, January durable goods. Been watching the futures ahead of that, and we're still in positive territory. Dow futures up by over 100 points. The NASDAQ up by over 160. You've got the S&P up by about 35. Rick Santelli standing by at the CME in Chicago. Rick, let's take it away.
Yes, there is a long list of data points here, so be patient. GDP, second look at fourth quarter, 2.3 our last look, and it remains at 2.3. To put it in context, 2.3 was actually the weakest since the first quarter of 24 when it was 1.6. If we look at personal consumption, well, it actually remained the same. Many were looking for it to deteriorate a bit. 4.2%, very solid reading, the best since the first quarter of 23. The pricing index is leapfrogging. It is jumping. Price index moves from 2.2 to 4.2. I mean, I have to look at that twice. That almost seems like I read it wrong across the wire, but it is 4.2. That would be the hottest. We're going back all the way to the third quarter of 22 when it was 4.5%. Now, if we look at the PCE on a core basis, now this is a quarter-over-quarter metric, it jumped 0.2 from 2.5 to 2.7. That would be the warmest since 2.8 in the second quarter of last year. So yields, of course, are going to most likely pay attention to that. Some will say it's older data. Durable goods now, 3.1% on the headline. This is January preliminary, much stronger than the 2% we were expecting. 3.1 would take us back quite a ways. Last time you had any number that was even remotely in that region, you'd be going all the way back to, wow, really way back. You're going back to June of 2020. June of 2020. That is really a very, excuse me. July of 24, we had that one outlandish read of up 9.8% July of last year. Now, if we take out transportation, we can really see what happens here. Take out transportation, Becky, it goes from 3.1 to 0. And, by the way, we had a slightly positive revision for the headline number from minus 2.2 to minus 1.8. So part of this is a kickback from last month's weakness. Capital good orders, non-defense ex-air proxy for capital spending up 0.8. And that, of course, is a preliminary read. It's almost 3 times what we were expecting. And finally, if we switch from orders to shipments, not good news here. We're seeing that shipments, more of a rearview mirror, is down 0.3. Down 0.3. That is preliminary, but that would be the worst shipment negative month-over-month change since July of 24. Finally, maybe considered the biggies, initial jobless claims, 242,000. That's about 20,000 more than we were expecting, and that is up 22,000 from a slightly revised 220. Now, 242,000 is still rather well behaved. It equals the exact number from the first week of 24. To find a higher number, you're going back to the first week in October of 24. And finally, continuing claims remain once again, other than one read over, actually not over, exactly at 1.9 million, and that reading was the second week of the year. It is hunkered down a little bit below that, 1,862,000. Now, after all of those data points, we are at 408 in the 2-year. Guess where we're at? 408 in the 2-year, up 1 basis point. Where were we in 10s? We were at 428. We still remain at 428. That's up 2 basis points on the day. And keep in mind, we've had 6 consecutive negative closes, meaning lower closes in yield, higher in price. 6. Will this be 7? Well, right now we have a couple basis points that say no, but we'll have to continue to observe. We have held on to the green in the pre-opening equities, and I would suggest that these hotter kind of PCE and pricing numbers, they're going to make, I think, investors think a little more on the topic of how Friday's PCE numbers may look. Becky, Joe, back to you, and sorry for the lengthy read, but there's a lot of data there.